Hey, it's Crystal from Pumped On Property. Today we're bringing you this month's monthly market update. We're looking back at the data from February from the likes of CoreLogic, SQM, CBA and Propertyology and collating that information to give you a good market wrap. Diving straight into the data, I've got some really interesting figures. Start with CoreLogic. So according to CoreLogic, dwelling prices rose by 0.6% nationally over February 2024. Prices rose most strongly across Brisbane, Adelaide and Perth, and dwelling prices have now risen by 10.7% nationally over the past year. Prices fell quite significantly back in 2022. They were down by 6.4%, but values have been in a solid upward trend, especially over the past year, and now national home prices actually sit 1.8% above the last cyclical peak in 2022. In less than 2 years, the RBA has increased the cash rate by 425 basis points, but yet national house prices have rose significantly in that time. To break down the numbers out of February across the state-by-state averages, dwelling prices rose by 0.5% in Sydney. They trended sideways in Melbourne and only rose by 0.1%. This has been common over the last 6 months. However, in Brisbane, prices rose by 0.9%. In Adelaide, prices rose by 1.1%. And in Perth, prices rose by 1.8% across February. Prices also firmed across regional Australia, and they have posted a 0.6% gain in February to sit at 5.5% higher over the past year. CoreLogic expects that the national price averages should increase by about 5% throughout 2024. Whilst the market has been trending upwards according to CoreLogic, SQM also has some really interesting data about the vacancy rates. So vacancy rates nationally are down 0.1% to a new national average of 1%. Vacancy rates in the Sydney CBD, Melbourne CBD and Brisbane CBD are all down. They've decreased to 3.3% in Sydney CBD, 2.7% in the Melbourne CBD, and 2.1% in the Brisbane CBD over February. This is driven by an increase of tertiary students entering the rental market due to the start of the semester 2024. Capital City asking rents are also up 1.2% for the month of February. The new national median weekly rent is at $720 per week. So a big reason for these tightening rental markets, this increased weekly rental and the increased house prices comes from a really big imbalance in supply and demand. CBA has some interesting data around tightening in the construction industry, and new construction has fallen sharply over the last year. Consumer sentiment is now up after being quite declined over the last couple of years. However, CBA expects to see the RBA begin its monetary policy easing by about September 2024, and they expect to see about a 75 basis point decrease before the end of this year. This news is really bringing some positivity into the property market and the overall economy. According to CBA, household consumption has inched higher. It is looking stronger than it was last year. It is still down 2.4% over the year though. Growth in nominal income was stronger than growth in nominal consumption over February 2024. So this is showing an increase in household saving. That has come up from 1.9% up to about 3.2%. The average over the past year is sat at 3%, according to CBA. However, the 5-year pre-pandemic average was sitting at around 6% of household savings. In addition to some of this information coming out from SQM, CoreLogic and CBA, Simon Priestley from Propertyology has put out some really interesting data around population growth, particularly for Brisbane and the Southeast Queensland market in the lead up to the Olympics. Brisbane's really catching the attention from international investors, migrants looking for jobs, and domestic and interstate buyers are also very attracted to Brisbane right now due to the affordability. This population influx is further squeezing the property market, pushing prices up higher, squeezing stock levels and vacancy rates. Overall, the monthly wrap for February looks very, very positive for the Australian property market. Not only have we got whispers of the rate cut beginning sooner than maybe we expected, and hopefully some big cuts happening before the end of 2024, Australian property prices have also risen for the 13th consecutive month, according to CoreLogic, posting that solid monthly increase of 0.6%. Vacancy rates are now at all-time lows at 1% nationally, and Brisbane property prices, along with Adelaide and Perth, are really leading the way in terms of that growth, due to the positive sentiment, the population growth, job growth, and economic growth expected from now through to the Olympics. Hopefully you've enjoyed this market wrap. I really appreciate you taking the time to listen to this video and get your head around what's currently happening in the property market. Give this video a like or a thumbs up and tune in next month for another wrap of the Australian property market for March 2024.
Whew, that's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Good. That's so nice. Oh.